So today we're going to go through our investor relations job market stats and look at the fiscal year 25 investor relations job market outlook. We published this to LinkedIn on November 16th, and it was very promising data that has only accelerated since that publication. We will do an update in December to show that acceleration. So let's get into the details. From an executive summary standpoint, fiscal year 25 is shaping up to be the best year in 3 years for number one IR job opportunities. In November alone, we were expecting between 5 to 7 opportunities. And at the time of this deck's creation, we were at 11. This number has accelerated to about 25 as of November 25th. So right now, when we created this deck, we were expecting between 161 and 175 IR jobs available in 25. This number will be much higher based on month to date November, and that growth rate of 5 to 14% is going to be more like 18 to 25%, which is a significant acceleration in the month. And again, the key here is we're seeing more turnover of number one IROs as we've moved through this 3-year period. So let's get into the trends and the visualization through charts. So we look at November, month to date, when we did this deck, we were at 11. We were expecting between 5 and 7 with midpoint of 6. This 11 is now closer to 25, a really strong month. Now, when we plotted it out for the rest of the year, that meant we were going to do between 161 and 175 opportunities. This is going to be much higher given the strength we've seen since November 16th. From a growth rate perspective, we were initially thinking 5 to 14% year-over-year growth for number one IR job opportunities. For the rest of the year, we're actually going to be more at 18 to 25%, a significant acceleration and a very small deterioration from last year's 27% growth rate. So what we're seeing is an accelerating and strengthening market despite the job market carnage around us. On this slide, we show what our midpoint forecast looks like. We were thinking about 168 jobs as our midpoint. Here, we drill into the fourth quarter to show you how we get to between the 161 and 175. And again, the 157 in November is now closer to 168 since we did this deck on the 16th. We're seeing really solid opportunities being posted to both Indeed and LinkedIn. Now, what's interesting is that throughout the year, the data has tracked well ahead of 24 and 23 on a cumulative basis. So despite some of the hiccups we've seen throughout the year in our monthly or quarterly reports, it's really interesting to look at this on a full year time scale and see that 25 has actually been a stronger year than we expected. On this slide, we're showing the low end of our range, which gets us to about 161 and still means that there is a growing market. The next slide is our high forecast, which gets us to 175. Again, it's going to be higher than this in our update in December. And then we look at turnover by exchange. And what we're trying to do here is show how many jobs open up in a given year, based on the number of companies that are publicly traded on the New York and NASDAQ. And we're going to do an update to this analysis in December as well. So what we're seeing is from a NASDAQ perspective, we've seen acceleration in turnover that based on the current, whatever number of jobs we've seen throughout the year, we're at about a 4.8% turnover rate. On NASDAQ, where we think to end the year is somewhere between 4, 6, and 5 on that turnover rate. And then we look at the New York Stock Exchange, it's much higher. It's gone from 5 to 7% in the 3-year period. And we're thinking it's going to end somewhere between 7 and 7.5% by the end of the year. So with that, the key takeaway is that we're seeing a very strong November. We think this is hopefully portends for a strong December. But again, follow through remains weak. Thanks for watching.